Good morning and welcome to the DecisionPoint Trading Room. My name is Erin Swenlin and I'm here with my father, Carl Swenlin. We are going to help you determine the trend and condition of the market. And then from there, we do, as we do with our diamond reports, we're going to then try and find some stocks that will ride that tide from some of your symbol requests. So first of all, we're going to start off with Carl giving us the market update, and then I'm going to be going into the sectors and a few industry groups, followed by all of your symbol requests. Please use the Q&A box for your symbol requests, and you can use the chat box to talk amongst yourselves. We do have a chat moderator in the chat room, so go in and say hello to Fred. Let everybody know where you're from. Just remember when you use the chat room, do use the drop-down menu above your comment to make sure you send it to everyone. Otherwise, it just goes to me and my dad, and we don't look at the chat box. We're only paying attention to the Q&A box. All right. With that, Dad, I'm going to pass it to you and tell us what's on your mind right now going into this market week.
Okay. Right now on my mind is the CPI, which the latest version will be out tomorrow. And what has happened is this is the first one where they'll be using the new version of calculation. Some of the elements inside it, you can look it up, but basically there's some of the elements inside have been modified. They used to do it on a 2-year rate of change. Now they're going on a 1-year rate of change. Now, just imagine we have in the last 2 years, the first year we got a lot of increase in the CPI and inflation, and the most recent year it's moderated somewhat. It's kind of flattened. So it's going to look good. That is my guess. It's going to look better than people are used to seeing, and so I would be very careful of some of a rally that is being driven by the ecstasy of this wonderful new CPI. I won't believe it. Okay, let's get rid of that and go to SPY. We have basically, it looks like a flag formation here, which is a bullish formation. And we could, with the CPI juice, we could be breaking out tomorrow at a really high. Again, I don't know this is going to happen, but it's something we should be alert for. Don't get too overcommitted to the short side without seeing what's going to happen here. Also, we've got this rising wedge pattern, which is a bearish pattern. We should expect a breakdown from that. So different things going on there. Looking at the advanced decline lines, we don't usually look at this. These are old-time indicators, which were good as we could get at the time. But basically, we do one for the advanced decline volume and the advanced decline breadth. And not really, it's basically confirming what we're seeing in the price. Now, the S&P 500 advanced decline line is quite a bit different. And we're seeing essentially a series of flat tops, a little pop here in the middle, but this is not helping us with seeing this decline that we encountered. The advanced decline volume line, on the other hand, is much more helpful. New highs and new lows. We always keep a close eye on that. Really not telling us much. This is the indicator's posted. It's an end of day indicator, and it's posted as of Friday. And right now we've got a nice rally going on, so we should see an expansion of the new highs. Bias assessment. This was telegraphing some pretty bearish information on Friday. Again, these are end of day indicators, so we won't know what this rally is going to bring in terms of these indicators. We had double top on the Silver Cross Index. That's the percent of stocks with the 20 EMA above the 50 EMA, which is an intermediate term, a Silver Cross buy signal, we call it. And you remember that this indicator has a finite range, 0 to 100. And so when it gets up to the top, I'm not too concerned about divergences, especially at this small amount. But obviously, we're showing higher highs and lower Silver Cross Index. But while the price is not an infinite range, it's not finite. It's not contained within this 0 to 100. Golden Cross Index at 61, 62 rounding. And these are the derivative indicators from that. Now, for the for the Silver Cross Index, we have the 20 EMA and 50 EMA. Stocks above the 50 are 68, and the stocks above the 20 are at 54. So with the Silver Cross Index of 76, there is no chance within these numbers of it improving. It should be continued down because the price is below these moving averages. Same methodology with the Golden Cross indicator. We've got 66, 67 stocks, 67% of stocks above their 200 EMA, 67% above their 50 EMA. The Golden Cross Index is at 61, 62. So there is room for some improvement, but not likely to last very long because of the problem with the Silver Cross Index. This is a 3-year chart, but notice that we have the Silver Cross Index topping, and all these indicators have topped and are in decline. They ticked up on Friday, but they're in decline, and a single day tick is not something to change your opinion about. Our short-term indicators, again, as of Friday, we have some improvement on the Swenlin trading oscillator for breadth, but continuing down on the STO for volume, and negative divergences. And that's concerning, of course. Our intermediate term indicators, AIT, intermediate term breadth momentum and volume momentum indicators, and they are backing off and have a negative divergence on breadth, and volume basically is confirming this top. So the confirming doesn't mean it can't go down. It's just there's no divergence involved there. US dollar indicator here, it's been in decline, starting a rally here. We've got a little short-term rising trend line, which is not good for gold. Here you see gold is throttling back, and it's basically, I would call this a reverse flag. It's not the cleanest I've ever seen, but I think the mechanics are there, so we'll be liable to see still lower prices on gold. Crude oil, USO, basically in a trading range and moving to the top of that trading range. Okay, this is the 20+ year treasury bond, ETF, and basically we have a triangle, a rising triangle, do we call that?
Yeah, ascending triangle, I would say.
And
Those are bullish.
what is the expected resolution of that?
Yeah, so it should be, so if it's the thing is it could be a symmetrical or it could be an ascending triangle. And of course, each one is a different outcome, bullish versus bearish. So the ascending triangle is definitely a breakout setup. If it's symmetrical, not so much, because it's a continuation pattern and the prior trend going into the symmetrical triangle was down. So then the expectation is the breakdown. But if we get the breakout, then we'll know for certain, I would say it'll be confirmed that we have that bullish ascending triangle. And the expectation once you get that is basically the length of the back of that pattern. So it could be quite a rally off of that. I don't know. I'm of the opinion interest rates are going to rise. So I think we're looking at a symmetrical triangle now.
Right. Every time we hear the Fed chief talk, it's not, no, they're not going to let up. I believe that. Here's Bitcoin had a drop last week around the top, and this is a reverse flag, so we would expect Bitcoin to continue lower. This is the 10-year Treasury year yield. We've got a breakout, not very vigorous breakout, but it has broken above this declining tops line, and it isn't just a sideways move, it is moving higher. We've got in the sectors, we've got two on the verge of changing long-term signals. Here we've got technology. The 50 is approaching the 200. It's going to take a few more days unless the price gets moving higher. But price is above both the 50 and the 200, and so it's as long as that maintains, 50 is going to cross the 200. And utilities is the other one. This is on the looking for its a golden, not a golden cross, a death crossed sell signal, with the 50 about ready to cross down through the 200 EMA. Looking at the high tech stocks, Apple is still in a rally, and that is one of the things that's keeping the S&P 500 elevated. Amazon rallying today, also in a rising trend, although the PMO has topped. So actually, you can see, I didn't draw the line, but you can see this is down below the short-term rising trend. So that is apt to be heading lower. But for today, it's up. Google had a nice rally. Now it's definitely falling back off of that. PMO is topped and it's crossed below its signal line. Meta Platforms, this is basically a flag formation, although it's hanging down out of it. But I'd still say it has the potential to continue higher out of that. Microsoft rallying nicely today, and it has been in a rising trend since the first of the year. And actually, this bottom is above this bottom, so the rising trend actually starts here, although it's a little sluggish at that point. Netflix it's up 136%, pulling back away from that top. NVIDIA, PMO top, and it looks like it turned back up again today on this rally. And Tesla, coming off the rally top of 109%, almost 110%. And PMO overbought and starting to top. And unless you can think of something I've forgotten, I think I'll be, well, let's take a look at the, see if there are any questions.
Yep, there is one that I think you should answer because we were going over the market overall. Anna is a little bit confused because she's wondering, so is the SPY expected to go up based on our crosses and breadth, or is it expected to go down? What are your thoughts as far as the direction of the market in the various time frames?
Okay. Let me go to the bias assessment chart. Look at the 3-year chart. Based on the Silver Cross Index, it's a double top with a slight negative divergence, and we've got prices are falling below their 20 and 50-day moving averages, and they are lower than the current Silver Cross Index of 76. It's at 76. This is at 54 and 67. So the internals are pointing downward.
So yes. Short term, I mean, we're seeing that loss of stocks above their 20 and 50. So that really colors the short term into, a more bearish setup. And then, you go to the intermediate term, and then we're stuck with a Silver Cross Index with a negative crossover with higher percentage than what we're seeing about, above their 20 and 50. So again, then now you have to think of the intermediate term with a bearish bias. The question too above that was that, are you anticipating a higher CPI or lower? And so I think that colors the short term as well. And I know we've talked about what we thought is going to happen with that. You opened with it.
Okay, look at back here. We had this last leg of the bull market, and notice that we had severe divergences on the Silver Cross Index. And in the bull market, it doesn't matter much. This was just this is a 3 or 4% decline off of that. And the divergence persisted, and finally we did hit the price top, and we've been paying for this weakness ever since. And now we've got a situation. We know that the market has moved slightly above 20% from its low in October, and we're potentially in a bull market now. We are in a bull market by that measure, and so we have to start looking for potential of it ignoring the internals, because the internals do have to correct, but they don't. In a bull market, it tends to ignore them. So we don't know right now. I'm assuming we're going to see a pullback because of the condition of the internals, and the fact that this Silver Cross is overbought and turned down. So that's my assumption now. Obviously, I can't see the future, and we know. I spoke about the CPI announcement tomorrow, which could blow it all up. We just don't know for sure. But right now,
with the manipulation of the CPI, which direction do you think it would go based on that manipulation?
Because the people will, if there's an improvement in the CPI, and I assume there will be because of this adjustment, people will see it as, we're not going to worry about inflation anymore, and we'll have a rally.
Okay.
That's what I would assume.
I agree.
Yeah. Right, because they're taking the thinnest of good news and rallying on it. So
All right, that looks like it for the questions right now. But folks, if you came in later, or if what we were talking about, you have a question about, feel free to put that in the Q&A box and we can get right on that. But I guess it's my turn.
I guess it is. Oh, I had one thing to say about the CPI that I wanted to mention. We saw that CPI chart and it was going straight up. And I'm saying, thank you, Fed, for, this inflation, which is meaningless in terms of actual increase in value. It's just inflated. I looked up the house we had when you were born in Nebraska. We bought it in 1964 for $9,000, and today it's up for $197,000. And
wow,
same old house, but well, I have to say that they did add a bedroom, but it's a tiny house. I would say it was about 800 square feet when we bought it, and it's 1,100 now. But it's just, what did they give us? They didn't give us anything. They erode people's savings and inflate people's property. It's just it's ridiculous. Anyway,
right.
You've got it.
I will take it. All right, guys. So before I get into the sector review, I just wanted to remind everybody that Carl and I do have a website, DecisionPoint.com. And right now we do have 2 newsletters. The first one gives you the look at the overall market, basically a review just like Carl did at the very beginning of the program, where we have a article at the top that is different, and that today was the CPI. And then we also have, the look at each of those charts that we just looked at. And by looking at those same charts every day, we really get to see the nuances of what they do and how they work. And that's all in the DP alert. It's kind of the cornerstone. You need to know the trend and condition of the market, and then you can go toward Decision Point Diamonds, where I give you 10 stock and ETF picks per week. And you also, if you like this trading room, I have a Friday trading room only for subscribers of Decision Point Diamonds. And we do that one for an hour and a half on Fridays and get you all set up even earlier for the next week coming ahead. So come check us out. You can see our subscriptions over here. And we'd love to have you as a subscriber to DecisionPoint.com. So let's get into the sectors right now. Commercial is over. Okay. So one of the things, Carl talked about the 2 symbols that are the 2 sectors that are getting ready to possibly have some changes to the long-term trend model. There you go. There's the utilities one that we were looking at. And the other was, where is it?
It's utilities and technology.
And tech. Okay, yeah, right next to each other. So those are the 2 we're watching there. Notice the difference in the PMOs for all of these sectors. That's always the first thing I look at. I put all of the sectors up on one page using the candle glance, and then I look straight into what's going on with our price momentum oscillator. What is the momentum setup here? And the only ones that have kind of that potential for new momentum would be, first of all, energy, which has the new momentum. We're getting a positive crossover here soon of the PMO for energy. Staples are starting to see a PMO that's turning up, but we got faked out before. We're going to be watching because Staples could be forming a bullish double bottom right now. And if the market does get shaky, but wants to stay in this bull market sort of rising trend that we're seeing right now, Staples might be where we see the money rotate to, where we're looking at more defensive areas, food products and grocery stores, that sort of thing. So that's what we're going to be looking at in consumer staples. And that new momentum is starting to look interesting here. Other would be industrials, but it looks like that PMO is starting to top. But we see a PMO in oversold territory, so we want to see that turn up. You can see technology now getting a bottom above the signal line for the PMO, but it is also very overbought here. So we have to be careful. Looks like that flag, we were talking about that earlier. Looks like we do have an opportunity here for technology to continue higher, but we have to be careful. That price momentum oscillator is very overbought. So that's kind of your overview here. Which ones look like the weakest? Well, XLC, which really was leading the market, had its last gasp of a big gap up. Since then, it has covered that gap. Typically, when you cover a gap, you're going to see a continuation in that direction. And that is exactly what we're seeing on XLC. It is holding support at the 200-day EMA, so it certainly could make the turn here. But that PMO sell signal that's coming in looks quite ominous. I'd be very careful in that area. Technology is holding up. Comm services not holding up. Consumer discretionary, a similar situation, only it's really not holding above its 200-day EMA. And that PMO is top, starting to look a little bit weak there. I'd be very careful, but at the same time, you know, these are flag formations. They're continuation patterns. That tells us we should get a breakout to the upside. But we know there are a lot of things going on in this economy. CPI could, like we were talking about, juice this up, give us those breakouts, but we have to be careful. Are they fake out breakouts or not? So I'm going to be watching staples very closely. Healthcare is starting to look a little bit interesting. That PMO looks like it wants to turn up and it is oversold, but we're still in a declining trend here for healthcare. This is a sector to watch, but it's not ripe yet. So if you want a sector that's ripe, there you go. Technology and energy, those where you're looking for shorts, that would be in comm services, that could be in financials and in XLY, which are showing these, and XLRE, to be perfectly honest, it's holding the 200-day EMA, but that PMO is looking pretty ugly there. So let's dive in a little bit closer into the stronger sectors. Let's look at energy first of all. And what we have for our subscribers are these sector charts. Carl keeps them annotated. And so you'll always know kind of what we're thinking. You can be a subscriber to either of our letters and still get access to these sector charts. So, you know, these are exclusive to our website. So something to think about if you want to get these for all of the sectors. Energy right now, we have these. So all of the sectors, we have these under the hood indicators is what I like to call them. Very similar to the bias chart we were looking at. Silver Cross Index, remember, tallies up how many stocks within whatever you're looking at, in this case, energy, how many stocks have a 20 above their 50. And right now that is improving. It's at 56, 52 as far as a percentage. We have far more above their 20 and 50. Look at that increase in participation. This does look like a sector on the move and going to the upside. Stochastics rising. So under the hood, we know participation is improving for energy. The only issue I have with energy is this overhead resistance. And looking at that USO chart, it's getting really close to its overhead resistance. We're kind of at that decision point, as we would call it, to see which way energy is going to go. But it is looking a little bit suspect to me just because we have been in this trading range. The other one we were talking about that looked pretty interesting was consumer staples. And they haven't been in favor. But like I said, it looks like they're coming into favor and forming this bullish double bottom. I really like the look of that. We have the double bottom here also for the PMO. And it is headed up for a crossover. Notice the improvement under the surface here in participation. Certainly not what we were seeing on the energy sector, but definitely encouraging, getting a little bit more movement. that's why I would say this particular sector isn't quite ripe yet, but certainly worth a look going into this week. Stochastics turning back up, but as you can see, relative strength for this sector is still not improving to the degree we would like. We would want to see that declining trend in relative strength broken to the upside. Looks like it's trying to do that, but we're not quite there yet. Certainly some improvement though under the surface for XLP. So that is my look at the sectors. Let's go and take a quick peek at some of those industry groups that are within energy and within staples. So consumer staples, we have a couple groups here. So what I want to do is just click through and look at the chart over here and see what is the PMO doing and what is price doing. Well, obviously personal products, toppy, not looking good. PMO moving into negative territory. Brewers starting to see a turn to the upside, but that PMO still looking very suspect on a crossover sell signal. Food products or food retailers, I'm sorry, and wholesalers looking like we want a short-term breakout. It looks like it's about ready to do so, but the PMO is still very suspect. We'd want to be careful in that particular group. Food products, this is where we're seeing the double bottom starting to develop. So that tells me that this particular industry group is probably leading this sector to whatever, whatever direction it wants to go. So this is the industry group I would be watching very closely. Stochastics turning up. This group also has a similar situation with a double bottom that might be forming here. PMO not turning up quite yet though. Drug retailers really range bound, not very interesting. Soft drinks, nice breakout here. This is confirming a double bottom for soft drinks. Notice also that PMO buy signal. I bet Pepsi and Coke are looking pretty interesting right now. You can see that stochastics are almost above 80. This is looking like a very nice industry group, and it's matured to a point where I would say it's ready to be fished in. All right, tobacco, really range bound, not interesting to me. Distillers, toppy right here after hitting overhead resistance. PMO trying to turn up, but certainly not as interesting as food products, as soft drinks for sure. And what was the other one? Yeah, non-durable household, trying to set up that double bottom. So soft drinks looking pretty interesting here in consumer staples. And if we go into energy, you can see oil equipment and services. We're trying to get that PMO to turn up. Stochastics looking pretty good. Integrated oil and gas, new PMO crossover buy signal in the making. Exploration and production, we can also see the PMO rising, looking pretty good here. Range bound on pipelines, definitely not as interesting as those other industry groups. So if you are looking within energy, probably pipelines not going to give you the best selection, and neither is coal. We're seeing the PMO turning down on coal. So pipelines and coal looking suspect here, but I would definitely be careful in this group. Integrated oil and gas, oil equipment, services, these all look pretty good right now, but we did look at USO. It's very range bound. It's getting very close to its overhead resistance. I'd be careful with energy for that reason. All right, I think that leaves us, let's look at about 25 minutes, 24 minutes for symbol requests and questions. Were there any questions you wanted to answer?
Yes, from Bob. I am a subscriber to both services. Where can I find the under the hood charts?
Oh my goodness, yes. So once you're a subscriber, and even if you aren't a subscriber, the blogs and links page has everything that you need, from managing your account to all of these under the hood indicator chart lists. There's the sector chart list. You don't have to be a member of StockCharts. You can access these if you'd like to on your own. And like I said, they're all here and ready to go for you.
Updated daily.
Updated daily,
More
indeed.
important, Erin, the gold and silver cross index chart. That's what has the
Bias.
under the hood for all the sectors and indexes that we track.
Yes. Including new industry groups that we've added. We talked about that last week, so you might want to go check out that show so you can see some of the new golden and silver cross indexes that we've added. But blogs and links page, even if you're not a member, you can come here and you can see there are some free articles. This was the trading room. Like I said, you might want to go back and look at that one for our new symbols that we got. So great question. Anything else in the question arena?
No, let's start with the symbols. Yang.
Yang.
For long.
Okay, so this is the China Bear internet is what it goes for. So it's a 3 times juiced ETF. I do not own this one, but I have owned it in the past as a hedge. Found it to be pretty useful back here when we had the nice move to the upside. I'm liking the look of this chart right now, but I do have to tell you, just straight out the gate, because of what I'm talking about, really high volatility. I mean, look at right now, we're looking at an almost 6% move to the downside. Yet I look in the thumbnail and the rising trend is still intact. So the PMO is still rising. So this still looks really good. But the problem is you're going to have to deal with this type of volatility on the way up. And if it breaks down in the short term, now you're going to have to deal with a lot of that volatility to the downside. So certainly plenty of upside potential for this one. But you have to know going in that you're going to be dealing with a lot of get the tums out. Let's put it that way. So I like the look of this. Stochastics are acting a little bit, tricky here. And RSI is kind of flat right now. But I would be careful a little bit, right? We have the option now, if you're not in this one, to watch and see what does happen with CPI tomorrow. This could juice some things for China as well as for the US. And if we're going to see some upside tomorrow, that would offer you a little bit better opportunity within this, because I expect that it will probably go down one more time tomorrow. So be careful.
Okay, MAR.
So this is a consumer discretionary. We talked about how the momentum is starting to fade here. This looks pretty textbook as a flag, but it's not the kind you really want. And the reason I say that is when you have a bull flag, you really want the flag to be sort of in a declining trend, not in a straightaway move like this. And you certainly really don't want it to be kind of angling up. So this one's sort of neutral in that it could break to the upside, could break to the downside. Really, if it were a declining flag, I think your chances of an upside break would be better. So, I can see this lining up, this trading range. We'll get a breakout, and then we're going to have that ugly pattern that we like to call a pig's ear. PMO is topping. I think this one, and knowing that sector is starting to struggle a little bit, I see this as a hold, but I'd probably want to put a fairly tight stop on it somewhere in this area near that December top, just because this is looking a little bit weak. Like I said, we're thinking CPI is going to come in and we're going to get a rally tomorrow. So things could look good for tomorrow, but I would just be careful after that if this turns out to be just a newsy reason that we get a rally tomorrow. And the PMO is just really I'm not a fan of that.
Okay, Disney for a long-term hold.
All right, I was looking at this chart earlier. So again, communication services, starting to see some problems there. Disney, we had this great rally, and now it looks like it's breaking down. You can see support is fairly strong at this level right here at these lows, kind of lining up with these tops, at this top in particular. And you can see the price is now below that support level. It is also dropped now below both the 200 and the 20-day EMA. Stochastics are flying lower. If you were lucky enough to get in on this rally, This looks like it's topping and it's getting ready to eat out, eat some of those profits that you've gotten. So I know for me, when I see a PMO that looks like this, I'm usually finger over the button. That's kind of my setup there. So I'm looking at this. I don't know that I'd even feel comfortable holding it, knowing it's dropped below the support level.
What
But
about,
I don't think I used the disclaimer to begin this, but we are not registered investment advisors. So all trading decisions are your own. So I'm giving you my thoughts as far as what I would do, but I am not giving out any recommendations. I don't have the stomach for that. That's for sure.
you wanted to know the long term, so we should look at a weekly at least.
I agree. Yeah, so longer term, it doesn't look too bad. It sort of has this Adam and Eve sort of double bottomish look to it, and PMO is rising.
Positive divergence on the PMO.
Yeah,
That's a good thing. So
that's actually a good thing.
yeah, long term, I think.
Yeah, long term, it doesn't look so bad. Short term, since it is looking not so great, I think that's where you get your opportunities on pullbacks. This would be, I'm looking at lower prices coming in here. I mean, we broke the rising trend, but keep it on the watch list, because if you have a weekly chart that looks that strong, and it turns out that we are in a bull market, I mean, we're thinking that we've entered one in the short term, but we need to deal with some pullback first. And these are the kind of charts you want on your watch lists.
CHPT.
Okay, charge points. Okay, I'm going to do a 5-minute candlestick chart just after this to give people an idea of how to time their entries and exits. It is a trading room after all, so I want to give you a little of our insight on how to do that. ChargePoint, it's a kind of a similar look to Disney, right? We've got this sort of rounded top here, and in this case, it didn't get above that 200-day EMA, and PMO is in overbought territory and topping. Stochastics are falling. I don't like the way relative strength is acting here against the group. RSI trying to rise. So where is my support?
Well, you got May, December double bottom, which is
yes. So in the longer term, I imagine this weekly chart looks fairly decent. The PMO is trying to top a little bit here, but yeah, double bottom-ish for sure. There's your May, and then there's your December lows. So we could be setting up something nice. Certainly the declining trend is looking interesting. You've got this declining trend that was broken. So again, in the intermediate term, I don't think this looks quite as good as Disney does, but certainly, looks like it could be coming up with something. But right now, short term, not looking good. Not looking good at all here. I would be looking for, let's see, supports right here. We're holding it. So that tells me it could be a hold. Make sure that it's going to stay, maybe set a tight stop here so that it doesn't break yet another support level, because it is holding support. Let's look at the 5-minute, and mainly because I want to give you an idea of how to time those entries and exits. I use a 5-minute RSI, a 5-minute PMO, and I have, for context, on balance volume for those 5-minute charts. But what we're primarily looking for, a conservative entry on a 5-minute candle, is a 5-minute PMO positive crossover combined with a positive RSI. Soon as you get that, that's when you put your finger on the trigger, because now we have everything set up as far as rising momentum. We're now in positive territory, not overbought, not oversold, but not in negative territory. Now, if you want to be a little bit more aggressive, you could go then when the PMO turns up. But here's a reason why maybe you don't want to do that, because you can get faked out. Once you get the crossover, that's a pretty good signal. Maybe you don't wait until the RSI is positive. So there are some nuances here, but if you want to just straight up, you're a beginner, the The mechanical buy signal is a PMO crossover on the 5-minute chart and a positive 5-minute RSI. Now, of course, the question is, when the heck do you sell? That would be when the PMO turns over. As soon as the PMO turns over, that's your sell signal. And typically it's going to get you out at a better point than if you had just walked in here and then sold down in this area. At least you would have hung out here because you knew you had the PMO buy signal. You'd have stuck it out. And then once you got that nice turn, or even here when the PMO started to turn, you're in better shape than where you would be back here and certainly back here.
BBY.
Another consumer discretionary. I would say this is in the hold department. So it's still holding the rising trend, it looks like. Yeah. So it's still holding the rising trend. Nice little bounce off that. PMO is not ripe yet. Personally, I don't buy any stock where the PMO is pointed down. It's just, I mean, it's certainly the stock could go up the very next day. It could be just fine. But it's kind of like putting, stacking the cards in your favor. You know, you're really setting yourself up more for success and higher confidence level if the momentum is rising. So momentum isn't rising yet, but it is decelerating, and stochastics are trying to turn. I'd say this one isn't quite there yet as far as a buy, but certainly a hold. It's holding the rising trend. It's holding support at the 50-day EMA. But as far as a buy, at least for me, I don't see it at a buy point. But again, if you have a higher risk appetite, the PMO is decelerating. The RSI did turn up in positive territory. Stochastics look like they want to turn up. So it's an early entry on this one, but it doesn't look too bad. Just remember, it is in a sector that is starting to show some problems. It does look like it is in a rising trend channel. So that's a good sign as well.
Okay, we've got a question here we got to jump to. In order to get S&P 1500 in StockCharts scans, does one need to add 500, 600, and 400? You get the gist of that?
Yeah, and yes.
How do you get the 1500 in a scan?
That's what, yes. All right, so here's your scan workbench. What we want are indexes and ETFs. So we want to add the S&P 500. There it is. We want to add the 400. Now I'm going to have to, we can't do these and, so we're going to have to fix this, but this gets all of these on here in 600. So we don't need to tell it what type. We don't need, because we know we're just looking at those. But you can't start with an and, so we know we got to get rid of that. But we can't have something that's in all three groups. And that's what those ands are saying. It's in that group, and well, that's not the case. We need ors. Check your syntax. Run your scan. And there you go. And you have them all.
Excellent.
There's your quick and dirty how to use a scan.
Okay, next symbol is NVDA.
NVIDIA.
Yeah, we covered.
All right, so semiconductors doing really well. You can see the relative strength of semis. And when I've been looking at that golden and silver cross, and we're going to look at it because I think you can't not look at it for semiconductors. So they've been holding up 100%, have a 20 above the 50, almost 3/4 have a 50 above the 200. But this is the big problem here, especially when you look at it in the thumbnail. We're losing a lot of stocks above their 20. That tells me that the industry group is breaking down. It's not horrible because these participation numbers are pretty good, but it's not 100% like the Silver Cross Index. So we know Silver Cross Index is going to top here. It's going to have a negative crossover. We don't know how long or how far it will turn, but it is really setting up right now to show a little bit of deterioration under the hood, as we talk about. So semiconductors are still showing strength, but we know they're deteriorating under the surface. So let's get back to NVIDIA, semiconductor. This one is a leader in this group. Relative strength is improving against the group. The group is doing well. This one is set up to be successful, mainly because we know semiconductors still have strength. There still are some strong stocks, and you picked the one of the ones that are strong within the group. But again, we do see some deterioration under the surface, so we have to be careful. PMO did turn up above its signal line. I see a possible break in this rising trend, though, that I don't like. I could be wrong. I might be looking at this incorrectly. Yeah, it looks like it's holding up barely. It's trying to break down out of this rising trend. Is that a trend channel? I'd say it's a trend channel. So breakdown here, though, would be especially ugly, in my opinion, because the PMO is overbought. Right now, this one looks like it's holding up. If we are going to get a rally tomorrow, I would imagine this one's going to rally, but be really careful. Keep your stop in play. Let's see where the stop level might be a good place. I like to set my stops right around support and resistance. So let's grab this. So inspect tool, put where you want to start, click, drag down. And then if you look on the left side, I wish they'd make it a little brighter, but you can see the percentages. I know that this is the next level of support, this top and this top back here. So I know I want to have my stop right under that. That'd be about 7.8%. based on where the price is currently. If you wanted to tighten it up a little bit more, you can see these lows. That would give you more of a 5.8% stop. But I would be setting up my stop probably tonight, just in case CPI doesn't come in the way we expect it to, and the market doesn't like it. But if it does, I think you're good to hang out till tomorrow, but make sure your stop is in play.
Okay, SONO.
Okay, technology. Looks pretty good here. I would just say we have to be a little careful because this could turn into a reverse island, which means we'd get a gap down and then it would probably return to this trading range that we have over here. So I'd be a little bit careful with that. We have a gap that needs to be filled, and the gap up put us above that, so that's a good start, but we still have some resistance to deal with up here. I do like the way this is set up, though. I mean, I don't see anything that's a real problem here. Let's look at the weekly chart, and the weekly chart does look really good here. You can see that declining tops trend line that has been broken, so looking pretty good here for Sonos. If we wanted to just check quickly on that 5-minute, we don't quite have an entry yet. It would be very aggressive because the RSI is very overbought and PMO hasn't quite turned up or given us a crossover. So I don't know that we're at the buy point, but I don't know that we're going to get a better buy point just because it has been running hot all day today. And that is a breakout that we have there, PMO turning up. So may get stuck near the highs of the day, or you can hang out and watch this chart and see if we can't get a bit of a pullback before it goes back up.
SHAK.
Shake Shack, right? Very toppy. PMO on a sell signal and overbought territory. Stochastics heading down. It's not even performing that well against its group. It's in a group that's only performing in line with the S&P. So consequently, Shake Shack is underperforming the S&P. Lots of bad marks here. Certainly it is getting close to a golden cross. but that doesn't tell me that this is in great shape here. This just looks really toppy, so I'm not a fan here. Stop level, it's below this support level already. I'm not a fan. I would look for it to move even lower.
Tesla shows how you can drop 75% and go up 100% and not be anywhere close to back to break even.
Right.
Oh yeah. Well, yeah. Tesla, some of the Tesla investors are way behind the curve right now.
Oh yeah, for sure. So yeah, we had this 50% decline basically from these tops and this low down to the low here. So if you got in here thinking you're going to be okay and you endured that kind of downside, yeah, a lot of people are kicking themselves. But as you said, this is a point that a lot of people don't get. Going down just, let's say a little bit, maybe we're talking 20%. So you go down 20%. In order to make that back up, to get back up there from that point, that's a 25% gain. So, it might be that you lose a certain percentage, but in order to break even, you're now talking about moving a higher percentage to the upside. So an excellent point to make.
Okay, MEG.
All right, and industrial. All of these guys that I'm seeing are really toppy, these rounded looking tops. Those, I just don't want to get involved in a stock like that. I think you're just, and in this case, we also have a PMO that is falling. Support is holding right now. So maybe you set up a little bit of a stop if you own this one, or if you want to try it. But like I said, I wouldn't want to even try it because of the way the PMO is configured. So
we've run out of time.
Oh, it is 10 o'clock.
Yeah.
Thank you for that. I apologize if we did not get to your symbol request. We just can't cover them all. And we really appreciate you being here today with us for the DecisionPoint Trading Room. This does air at 3 p.m. Eastern on StockCharts TV, and you usually will find the replay on YouTube. That's all we have for you today, and we wish you good luck and good trading.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.